Hey everyone, welcome back to Zaki Crypto Update, your go-to channel for the latest insights, trends, and analysis in the cryptocurrency world. I'm Zaki, and today we're diving into one of the hottest topics in the crypto space, PiNetwork. We'll explore the 4 key catalysts that could potentially propel PiNetwork's price from $1 to $10. So, if you're curious about its long-term potential and want to understand what might drive its growth, you're in the right place. And remember, the opinions shared in this video are for educational purposes only. Always do your own research before investing. Before we jump into the catalysts, let's set the stage. PiNetwork has been making waves as a promising digital asset with a unique approach to cryptocurrency. Unlike many traditional coins, PiNetwork allows users to mine using just their mobile phones, making it accessible to a vast audience. Currently valued around $1, many experts speculate that, with the right moves, it could reach and maybe even exceed a price of $10. In today's video, we'll break down the 4 pivotal factors that could fuel this potential price surge: the open mainnet launch, widespread adoption for payments and real-world transactions, strategic partnerships and listings on major exchanges, deflationary mechanisms, and supply constraints. Stay tuned as we unpack each catalyst in detail, drawing connections between innovative blockchain developments and market trends that might transform PiNetwork into a mainstream digital asset. Let's start with the open mainnet launch, arguably the most significant milestone for PiNetwork. Right now, Pi is operating in an enclosed phase, meaning transactions are tightly controlled and only a select few can fully experience its ecosystem. However, once the open mainnet goes live, that's when we expect a paradigm shift. Increased liquidity and accessibility. With the mainnet up and running, PiNetwork will transition to a fully operational blockchain. This means transactions will be more fluid, and users can trade on multiple exchanges. It's like moving from a private beta to a full-scale product launch. A public mainnet builds trust. It signals to businesses, investors, and everyday users that Pi is ready for real-world integration. This transition will likely lead to more widespread adoption, not just from crypto enthusiasts, but also from merchants and enterprises. Mainnet isn't just about trading. It lays the groundwork for decentralized applications, DApps, to flourish within the Pi ecosystem, thereby expanding its use cases and value proposition. Think about the trajectory of other major blockchain projects. Many have experienced significant price appreciations post-mainnet launch. The PiNetwork isn't any different. As more users join and the ecosystem becomes vibrant and robust, the market's perception of its value could see a dramatic upswing. Next up, let's talk about adoption beyond the trading screens. The true test of any cryptocurrency lies in its utility as a medium of exchange. While many crypto enthusiasts are in it for the speculative gains, sustained growth is driven by real-world use. Already, we're witnessing a shift. More online platforms and local businesses are beginning to accept Pi as a form of payment. Imagine being able to purchase your morning coffee or book a service with a currency that's quickly gaining traction in the digital realm. One of the standout features of Pi is its mobile-friendly mining process. Unlike Bitcoin or Ethereum, which require substantial computational power and expensive hardware, anyone with a smartphone can mine Pi. This approach not only democratizes access but also builds a massive community base that's actively involved in everyday transactions. The more Pi is used for actual transactions, whether it's buying goods, paying for services, or even tipping content creators, the more it solidifies its position as a legitimate currency. Increased transaction volume can naturally drive up demand, setting the stage for price appreciation. In essence, if PiNetwork can establish itself as a currency that people and businesses trust for daily transactions, its intrinsic value will grow. This isn't just speculation, it's a foundational principle seen in many successful digital currencies. As adoption scales up, the network effect kicks in, and we could very well see a significant price jump. The third catalyst is all about credibility and liquidity, elements that are critical for any cryptocurrency's long-term success. Strategic partnerships and listings on major exchanges can be game changers. Why are partnerships and exchange listings so important when a cryptocurrency gets listed on renowned exchanges like Binance, Coinbase, or Kraken? It gains exposure to a larger pool of investors. This increases the ease of trading and can lead to a surge in buying interest. PiNetwork's next big leap: could $1 turn into $10? Being traded on reputable platforms isn't just about liquidity, it's also a trust signal. Institutional investors and major financial institutions often shy away from assets that aren't properly vetted. An official listing can therefore attract serious, long-term players into the ecosystem. Beyond exchanges, strategic alliances with fintech companies and global payment networks can provide additional layers of utility. Imagine PiNetwork being integrated into popular e-commerce platforms or used by remittance services globally. Such partnerships validate the technology and can lead to exponential growth in adoption. Historically, many digital assets have seen substantial price movements following these types of strategic moves. If PiNetwork manages to secure partnerships and exchange listings soon after the Mainnet launch, it could catalyze a massive influx of capital and elevate its market position. The final piece of the puzzle is all about supply and demand dynamics, specifically, the deflationary aspects of PiNetwork's economic model. One of the fundamental principles that drives value in cryptocurrencies is scarcity. Similar to Bitcoin's fixed supply cap of 21 million coins, PiNetwork's design includes mechanisms that gradually reduce mining rewards. As more users join and the network grows, fewer new coins are introduced into the market. This gradual reduction can create a scarcity effect, potentially driving up the price of existing Pi coins. There's also the possibility of implementing further supply control measures such as token burning or staking incentives. Such mechanisms would reduce the circulating supply even more, reinforcing the scarcity and, in turn, the asset's value. With a controlled supply and growing demand, the basic economic principles suggest that the price per coin could see a significant upward trend over time. This is the same logic that underpins the valuation of many established cryptocurrencies in the market. By effectively managing the coin's supply, the PiNetwork team can create a scenario where demand far outstrips supply, thereby supporting a price increase toward the $10 mark and possibly beyond. Now, let's tie it all together. The four catalysts we've discussed: open mainnet launch, increased adoption for real-world transactions, strategic partnerships and exchange listings, and deflationary supply mechanisms, all converge to create a compelling case for PiNetwork's potential growth. Cryptocurrency markets are notoriously volatile. While these catalysts provide a roadmap for potential growth, the journey won't be without challenges. Regulatory scrutiny, fierce competition from established coins, and technical hurdles are all factors that could affect the outcome. The ultimate success of PiNetwork will hinge on the team's ability to execute these plans flawlessly. Even the best strategies can falter if not implemented at the right time and with precision. Finally, market sentiment plays a huge role. As more investors witness tangible progress, be it through increased adoption or high-profile partnerships, the hype and momentum could drive a virtuous cycle of growth. In short, while predicting exact price levels is always tricky, the potential for PiNetwork to reach $10 or more exists if these key catalysts are met. The crypto community is keeping a close eye on these developments, and as always, staying informed is your best strategy in this fast-moving market. Alright, that wraps up our deep dive into the four key catalysts that could propel PiNetwork's price from $1 to $10. If you found this analysis insightful, make sure to hit that like button, subscribe to Zaki Crypto Update, and click on the bell icon so you never miss an update on all things crypto. Drop your thoughts in the comments below. What do you think will be the most impactful catalyst for PiNetwork's growth? Hear your opinions and any predictions you might have. The content in this video is provided for informational and educational purposes only. It does not constitute financial advice, investment recommendations, or an offer to buy or sell any securities or digital assets. Please conduct your own research and consult with a professional advisor before making any investment decisions. Thanks again for watching, and stay tuned for more in-depth analysis right here on Zaki Crypto Update. Until next time, keep your crypto strategies sharp and your portfolios diversified. Happy investing!